Hey, good evening, everybody. How are you? Happy Sunday. I had posted, wanted to talk about this. We talked last Friday, we talked about AMC. We talked about that spike in that call volume, the spike in the price, and then price came down a little bit, but it made the volatility on an option spike. And we talked about that, where that came from with the $3 calls for last week, the $3 calls for this week coming up. So it's Sunday ahead of the market open Sunday night. We're going to take a look at that. I had posted Friday about AMC. It was about an hour and a half after the open. I just said AMC had been seeing 3 days of positive net call premium. Was up about 4% for the day. It was trading at $2.93. Just kind of noticed it was up a little bit. AMC had been flat, and it was the May OPEX on Friday. And we just kind of posted some flow, noted the last couple of days increase in net call premium. It was just something I was like, hey, and then they were loading the $3 calls. The volume for the $3 for the Friday, May 16th, and then the May 23rd expiry noted that volume coming through. And I just put it out there. I said, boom, here they come. The volume started coming in there in the morning. And then it was, like I said, it was on the $3 calls for last week. And then for this week, they came through quickly. Other people posted about it. I'm not sure if that was a coordinated buy in a Discord or what happened. Well, we're going to talk about it. We're going to break it down, and I'm going to give you some answers and give you some feedback and some data and the why kind of behind that. So I posted that at about 10:03 in the morning. It was, like I said, about an hour and a half after the open, and we'll go back to it here, back on my page. And I talked about just kind of the action, what I would talk about in the actual video. But when we went back to the calls, it was just a couple of minutes from the alert, maybe about 10 minutes. Let me pull it back up here. Let's see here. And it was like Friday was the largest net call premium also for the past 30 days, which I found kind of interesting as well. Because AMC moved up to 318. We saw some volume come in as we alerted on those calls. But yeah, when AMC was up at $3.12, we caught that a little bit, like I said, ahead of the move. This is where that first wave of calls were coming in right here when they were around when the stock was around 280, and then boom, 290, and then boom, 312. But those calls moved initially the $3 for last week, around $2 all the way to a high real quickly of $10. I know not a lot for a zero DTE, but still it was this how it happened. As more of those options came in, market makers had to basically hedge against those options coming in by buying the underlying shares. The price moved up a little bit as more of those $3 calls became, got closer to the money. More people were buying calls, more people were buying shares. There was a little bit of a FOMO moment there, and then more of those $3 calls started coming in initially, which then spiked the price of the $3 calls for the May 23rd expiry around $5, all the way up to almost $30. So, I mean, they spiked pretty quickly on AMC with just in a few minutes of posting that. And we caught the flow live on Unusual Whales kind of ahead of the move. So, yeah, the $3 calls for Friday at one point were up 600%. And then the $3 calls for the May 23rd expiry this coming week, or not May 23rd, but the May 25th expiry. Yeah. I didn't even look at the date there. But yeah, they were up nearly 285%. And that was just at the time of the screenshot. Yeah, for the 23rd expiry. I apologize. So yeah, they moved. So let's look at it. When did they happen? Where did that happen? So we look at the chart here on Friday. It just seemed like a regular day in regards to volume. You had the open, the flatline price, and then right here about 9:50, we see a little bit of increase in volume there, which is right around the time these $3 calls started pouring in on AMC, and then boom, it hit real quick. You can see the shares coming in. That's other people, whoever was, buying these calls. Market makers are buying shares to hedge against the positions as the $3 calls are nearly at the money. And I'll explain that when we look at the Unusual Whales option flow. And then, like I said, very quickly, boom, it moved up. We posted about it right here at 10. That's when we saw the flow coming in, and the stock was around 293. That was that first wave of flow. And then by then, other people had posted about it. We saw it, and then more of that flow came in. And then I would assume a little bit of FOMO, and then some of that buying and selling occurring as the stock was over $3 because it was May OPEX, and then some of those positions being closed, as reflected here with the volume. So that was kind of a very quick move. And if you were in there and you caught it, I know there were people that had replied and said, hey, I saw your post that those calls went, two times, three times, four times on that. Yeah, it was quick. It moved nonetheless because the volatility got spiked. So let's take a look at that. Like I said, that was mainly driven. You can see the spike in the net call premium. It just seemed like a regular day for AMC up until that slight spike in the price. As soon as the price moved up just a little bit here, it was about an hour and a half into the open. Shortly before that post, I put on X. I'm going to go back to the timestamp on the post because I was just starting to look at it, just starting to put together the actual post, just to let people know, hey, I think there's an opportunity here. Yeah, that was at 10:03 a.m. Chicago time. So if we actually look here, that was right about the time that put premium started to spike a little bit, and that's what we caught, those first wave of the $3 calls. Then boom, the net call premium really spiked, and then people were chasing the move, and then net call premium remained, elevated into the actual close with over 500,000 net call premium. Not a lot, in comparison to other stocks, but it is quite a bit in regard for AMC. If you look at like the total premium was 4.2 mil on Friday with the net call premium. Pretty strong, about 500,000. That's a pretty larger day for AMC. Kind of have to scroll all the way back. Let's see here where we can get to a $4 million day on net premium on AMC. I can't even scroll all the way back, so it's beyond my scope. At least right here, I could drill back on a further result, but 3.3 back in February. I was just trying to go for the, how not big of an impact, but pretty good size impact there with the 4.2 mil total premium. But like I said, that was driven by the $3 calls coming in for the May 16th and the May 23rd expiry. Those were your highest volume contracts that came through on Friday. Were the $3 calls for Friday, the $3 calls for this Friday, and the 3.5 for this Friday, and the 3.5 for what we just closed, and then the $3 puts. So if we look at those $3 calls that expired on Friday, this is when they came in. So we have this on the 5 minute. We can see when that volume just started to pour in on those calls. Boom, it spiked them. So as soon as they come in, somebody was loading, and there went that first big block of 3,500 volume on the candle, about 5,000 worth of, let's see, about $3,500 worth of, let's see, candle volume. Yeah, so those are $1 a piece, and they bought 3,500 of them, and that spiked up to $2 very quickly, where some more were bought. Looks like some were sold. And then boom, that had really spiked very quickly to 5, and then some of them were getting filled there right at the top at 14 as they were selling. So they literally went from $1 to 14 very quickly and then got faded back down. So the move was quick, but that's where it came from. Because if you look at the IV, how much it spiked. It went to 3,911%. And we'll look at that IV and like the spot gamma and why you saw the increase like in the volume on the stock with the shares, how that corresponded with the timing of these options. I'll show you that here in a minute when we look at that spot gamma for AMC. So yeah, there was about 50,000 volume on those calls for Friday, just the $3 ones. So again, those were buyers and sellers. So many were buying and then some were selling. But the move came very quickly. But that's what pushed up that net call premium. That's what spiked the price. That's what spiked the volume on the actual shares that you saw if you were looking at like the common shares. It's because that IV spiked more. Those $3 calls all went then in the money. So it required market makers to continuously hedge against those positions. So the same scenario with like the $3 calls for the May 23rd expiry. If we look at that, boom, they came in at the same time. It was just a regular day. And then we start seeing some of those calls come in, and they were filling here at around $6, and then spiked all the way up real quickly to $27. So they moved very quickly, and then closed around $13, $14. So I mean, they were still up, double their money, but that was quite a move there. And you can see again the IV was 82% on Thursday, but those spiked to 91. So that IV on the $3 calls, it really came through. Whoever juiced that amount of premium into the stock, specifically into that option chain, it kind of moved it. So if we look at some of the premium there, you can look 11,000, 27,000, 30. I mean, it wasn't much, about 100 grand, 20 or 30 grand. It was really got it going on the $3 calls. for AMC for the May 23rd, but it was really on the May 16th. It was kind of that first initial hit of about 8 grand, and then another hit of about 5 grand kind of pushed it up, believe it or not. And then this next one kind of went full send. So I mean about 130, 140 grand, 150 in options just kind of quick, and it made it volatile. You saw the spike in the IV, the 3.5 calls as well. That was the same scenario. Kind of been quiet on this particular option chain, and then I know folks chased the move on the 350s for Friday for the 0 DT expiry. But you can see just a little bit of come in there, $500 worth. They were $1 a piece, and they went up to three. So somebody might have made some money where they bought them for two, and then sold them for three. But that was a very tight window. Again, look at the IV; it spiked. So that's what created the increase in the option price, the increase the volatility in the share price. It went up and it came down very quickly, but that's a pretty big spike in the IV there to go from the 200% to 2,000. We saw, like I said, on the $3 call for Friday, that IV spiked to nearly 4,000. So that is exactly what happened. It wasn't like, hey, what's the news? Why did this move? More than likely, it was like what appeared to be maybe a coordinated buy or by somebody of the $3 calls on the May OPEX. It bumped the stock. A few people, probably like us, reported on it. The flow gets covered. Other people buy it and chase the move. So yeah, somebody made money real quick in that scenario. And the 3.5s, the same, like I said, was the IV spike to the 1900. But let's look at those 3.5s for this week's expiry, the May 23rd. Similar concept. The IV didn't spike as high, but you can see they came right in the morning, dropped a couple grand, and then boom, there was the big hit to the candle, about 90,000, and then 90,000 in premium dollars spent, and about 6,000 volume come through there at the ask, right there kind of at the top. So it's kind of interesting because the volume had exceeded open interest. Buyers had been adding to this position, so 3.5s with AMC closing at 295. So these are just slightly out of the money. But yeah, that's what happened. They spiked in that regard. So if we look here, let's see at the options volume, you can see where that actually spiked. I'm going to show you the data here that corresponds. So here was just the regular AMC, and then boom, here comes some of that option premium, as denoted there with the green candles, and then boom, that went to the races, and then it just kind of faded. People probably got caught in the move, bought some, 0 DT calls, probably got caught there at the top and smoked. You've seen it, it happens. But that's the why. That, it was just this sudden surge very quickly of this call volume that came through, and it kind of pushed more of those calls into the money in that regard. So market makers needed to do a little bit of hedging. So we'll take a look at that. You're like, well, what did they hedge? Well, I'll show you that. We're going to look at the spot gamma here. We're able to do that on the Unusual Whales platform. So we look at that spot gamma. There was probably a lot of open interest on the stock here at $3. That's where a lot of the calls inputs, the $3 strike, there was the highest open interest there. And with the stock trading right around 295, what happened is it created a positive gamma for the stock. And what that means is for about every 1% change in price, it required about $2 million in hedging on shares from market makers and a long exposure of about 21 million shares. So if you pause or take a screenshot here, essentially what that means is that's the dollar assumed value of gamma exposure that market makers need to hedge for every 1% change in the price. So a positive value long gamma, which is what it was in this case, a negative value short gamma. So essentially it's just thought of, and you can pause or take a screenshot here, it's just thought of that market makers, they're providing the liquidity for options. So they're going to hedge based on investors, buying and selling call options or put options to hedge their own portfolio. So when you think of like the gamma on the options, just think of it like gamma measures the rate of change in the options delta. So that's like the sensitivity of the option price. So basically a simpler way to look at it. So gamma will tell you how much the delta will change if the stock moves by $1. So, or, you can think of 1%. So think of it like this, like delta is the speed of the car, which would be like the change in the option price, but the gamma, that's like the acceleration, how fast it changes. So you saw a little bit of that gamma as the $3 calls then went in the money, that kind of forced the stock. It forced some of that hedging. And gamma is the highest when the options are at the money. The strike's like close to the current price, and lowest when it's far out of the money. So that's why. So if you're long gamma and the stock price goes up a little bit, the delta increased by the gamma amount. But basically, in a nutshell, it's like gamma is the rate of change in the options delta. So, and it's crucial. In this case, it kind of moved it in that regard. So, you saw some of that activity, boom, and it surged into the stock, it surged into the actual shares. And you can see that as the market makers needed to hedge more of those positions, here comes some of the FOMO, more of that buying, and then more of the call option buying. It was just kind of a quick little, not a gamma squeeze, but in theory, it actually kind of was. Because if we look at the gamma exposure, the largest net gamma exposure was $3. So what was happening is, as AMC boom went to three and above, all of those calls went in the money. That provided that gamma exposure, which had a pretty large expire on the Friday's expiry. Was this is the net gamma, and then for this Friday, so still it's building there for the May and June OPEX, but some really positive net gamma in that regard. So if AMC does make a move to $3 or higher, like you saw Friday, it gets a little spicy in that regard because that's your highest point of net gamma. So all of those $3 calls then go in the money. So that's kind of what you saw very quickly happen Friday, and that did happen quick. Because if we go to the chart here, I've got it set on 5 minute. We'll go back to the 2 minute. We can look at that volume as it poured into the stock right around the time of those call options come in. You can see the first wave of call options. It spiked the price a little bit. Market makers probably got caught like, ooh, that's getting close to three. We might need to hedge against those positions. And then boom, the stock moved up over three with some FOMO. And yes, it sold off a little bit, but nonetheless, it still happened. But you saw some of that pressure coming by like the delta and gamma exposure at that $3 level. So again, use an unusual whale as that high level of net delta at $3. So that's the why. But that's what happened with AMC on Friday and the why. A lot of people are like, hey, this was that or this. It was fraud. No, it was not anything other than a quick juice to the option chain. Some people hit it. They probably made some money and then sold, pretty much their bags to somebody else who got left holding one. But AMC did close at 295 roughly. And it did, like I said, the gamma is still exists at $3. So it's the same as what I've been talking about with GameStop and covering gamma on that stock as well. At $3 there, AMC becomes, those calls become in the money. So that's kind of what will happen. If this happens again with AMC, you'll see that same scenario where it gets a little bit more dicey as more of those calls then go in the money. The market maker then needs to hedge against that position, just like we talked about here. And like for your gamma exposure here, I'll let you pause if you want to take a look. Take a screenshot there so you've got this information. And then gamma exposure is just the assumed gamma exposure market makers are exposed to. So you saw that gamma kick up, and then the price kicked up as well because they were exposed on the net side long with shares due to the highest open interest at the $3 strike. AMC went to three, and that's why you saw that kick in volume. So if we pull up like AMC on the daily chart with that actual move on Friday, I like to kind of use like moving averages on a longer time frame. But Friday was a big move in regard to the volume itself, kind of one of the largest volume days for AMC in quite a little bit of time. And I know it was a May OPEX essentially as well, but it closed above its 9 and 21 EMA and closed also above its 50 SMA. So its 50-day moving average at 283. So the last time AMC tried to go to the 50-day moving average was back on February 18th, and it was rejected. So this time, a little bit of a move through with volume and option flow, with the 200-day lurking right above there at 390. And then the high on Friday was actual 319. So quite a move and quite a close there above your 50-day. I know people have their own feelings about the stock, and that's fine. What I just said and what I committed to was just the why, back it up with data. As I said, I would, because a lot of people are like, hey, what happened? I got some messages. Hey, Wolf, you cover AMC and the option flow a lot. Like, what was going on with AMC in that regard? You posted. I know some people had replied to my post and they'd made some money Currently jumped in as soon as he posted. Currently sitting at 4x. What a move. Very nice, Derek. But yeah, I just said I would post it. 'Cause like I said, it was the highest net call premium in the last 30 days. And the flow alerts come in very quickly with unusual whales. And boom, they were alerted and some money was made. Whether you feel, however you feel about the stock is fine. What we highlighted here was the opportunity to make money. And we used it using data from unusual whales. And we got the drop, basically the traders juiced the volatility. And then we caught the move, and I think a lot of other people did catch the move. So yeah, like I said, it was propagated by those $3 calls that had come in for the Friday expiry as well as this coming Friday. But it was really the Friday options that kind of juiced that net call premium, and we showed you that. We backed that up by data. So some people would ask, well, hey, if you've got unusual whales, like how would I get a flow alert? How would that work? You say you can get alerts on that and things like that with with unusual whales, and you can depending on how you've got your filters set up. You set up filters, based on many different, whether it's calls, puts. You want to look at some where there's a larger ask percentage than there is a bid percentage. Maybe you're looking for more, buying as opposed to selling. There's even an AI filter where you can ask AI and it'll kind of help pre-build filters for you, which you can then set alerts for. So I'm going to go ahead and reset just all my filters, even though I've got a ton of them. And we'll just, we'll look over here. I've got some of my saved ones here. But we'll pull this up for AMC. I just want to show you, like how you would do some kind of, flow alerts or filtering there on AMC. Is there things that you can see? So just even like a pre-built filter from unusual whales here. Like we saw $3 calls coming in for September as well, and June and May. And then here's where the May, let's see, May 16th, we had some repeated hits. Yeah, so those threes were getting lit up shortly in the morning, even on just like generic alerts from unusual whales. So pre-built, just plain Jane unusual whales alerts would have got you in hypothetically, for example. Let's pull this up here. On the $3 calls, let's see. Yeah, they were coming through. That was on the sell side. They started selling them very quickly there. And then, yeah, those alerts came through very quick. And then more there on the ask side as some were chasing that move on the $3 one. So let's look at that actual alert right here. So there was just volume there. And they came through at 10.53 and they were buying them at $20. And these were the $3 calls for this week. So they obviously have not expired yet. But that was an alert, just a generic flow alert. So if you had it more granular, you would see on, let me see here for the threes for May 16th. This would let you know right here quickly that they were leaving and went ahead and took profits. Let's look at that one here. Because you got the repeated hits descending fills. So how that works is here they were slamming basically hitting the bid and selling. They were getting their money. They are taking their profit. They're selling them at 15 after just buying them for a couple of bucks earlier in the morning. So there's 173 at $16 each. So yeah, I mean they went through. They, like I said, they spiked quickly. They came up and they went down. So if we look at that here, let's see, these were the ones for May 16th. Like I said, they were buying them for a buck, and then boom, they spiked quick. So it was about 46,000 volume. So it was a good move. It spiked the IV. That's what spiked the price. But net call premium stayed throughout the day. So we'll look at the open interest change. I'll post that on Monday morning. But yeah, just wanted to kind of give you the why in the breakdown, how you could use unusual whales to see that, how you could use it to kind of help make some money. We try to put it out there ahead of you, ahead of ahead of the moves. So, like I said, I posted it the $3 calls for today and next week, seeing the volume. I was trying to make it clear, like I can't just say, "Hey, buy this," but that was kind of like, "Hey, this is happening. This is moving right here." And then when we looked at the gamma, it was just kind of like, "Whoa, if this thing gets to 3 or higher, these calls will move real quick." Just because AMC had that strong gamma and pressure at that $3 level. So that's just kind of what I wanted to highlight for you during the video. I know a lot of people, look for like an explanation, look for the why, and sometimes people don't know, but I like to look at it and base it based on the data. What can we find within the option flow, or what was the stock doing at the time? And that, like I said, it was mainly juiced by those call options. So we'll see what the market brings this week. Now that we've got the May OPEX out of the way, we'll see what happens. AMC, does it go back over three? Does it retrace, back to where it's been, retrace down to its moving averages? You never really do know. You'll just have to follow it. I mean, it's been down for quite some time, though. Everybody knows that. So I think Friday was an exciting day, just for a lot of different investors, for a lot of different reasons. Good volume. I think, for example, Final Destination Bloodlines, it did over 100 mil this weekend. In fact, I was at AMC last night with family as well. We watched Accountant 2. So, yeah, I mean, I was there at the theater. Very nice, So I'm not sure. But just very interesting to see that kind of spike there in the premium. Like I said, to see the $3 calls, to see that implied volatility spike to nearly 4,000%. So that's what happened. That was the why. And like I said, I wanted to post a video and talk about it. I just said, hey, if the video I had posted on X, I think Friday, yeah, I just said, if the post gets just one like, I'll drop a new video covering the math here. Let me see. Oh, that was breaking down the GameStop post there. Go back to the profile here. Yep, and I said new available, be available Sunday, which it is. Yep, so you'll be seeing that. And the post gets just one like, I'll drop a new video covering the AMC option flow Friday. How traders juice the volatility. We saw that with the purchase of the $3 calls for this week and next week. Goodness. Which then made the premium spike as market makers hedge those options with shares. Grab my drink of water here. I get dry sometimes when you're talking on the microphone there. But yeah, it's a nice little spike in premium. That's what they did. Like I said, if you want to also, the videos are available on YouTube as well. So you can go visit that, check that out. So I've got them up there. 54,000 subs on the... That's one of my other channels on YouTube rebranded. So I've got all the videos on there. So you're available to watch them both on X and on the YouTube as well. But yeah, there was your why on AMC. If you didn't like the video, just let me know down below. Reply to it. Share it with somebody. But that's the data. And if you want me to look at something else on the option flow, I'd be more than happy to do that. But like I said, I kind of gave you the gist of there was your highest volume contracts there on Friday. And we can take a look at we'll look at the open interest changes on Monday morning. I will post those for you. But yeah, hope you enjoyed the video. Share it with somebody. And that is your why. Nice little spike to the option premium. Somebody turned those the $1, $3 calls into $12. A nice 1,200% gain real quickly there. But yeah, if you enjoy the video, great. Appreciate it. Share it with somebody. Have a good rest of your evening, and we'll see you tomorrow around the internet in a new video and new option flow. Have a great night. Enjoy the rest of your evening and weekend.